All right, let's stick with this theme of staples. A member of the investment committee is actually bailing on a staple stock. Let's bring in Bill Baruch. And Bill, thanks for being here. You actually just sold Coca-Cola. That's one of the names listed in this Citi buy note.
Yeah, I sold it. It's more of a rotation, but first I'll talk about Coke, and you just mentioned Procter & Gamble. We're talking about forward multiples in the mid-20s. I think Coke's about 24, same thing with Procter & Gamble. They're also becoming pretty crowded trades. I think this sort of buy note that we're talking about right now is a little bit of a, we've seen a lot of banks move in that direction. For us, though, it's not just abandoning staples. I've rotated into AT&T. AT&T, I think, is sort of an unloved name. So going from a crowded trade to something that can actually have some tailwinds. And I think AT&T, with a multiple 1/3 of the size of Coca-Cola, if we're going to go into this recession, in sort of or a recessionary trade, we're going to see a lot of value in the lower multiple staples. But those high multiple staples like Coca-Cola, I think they're going to struggle. Not only that, if there's liquidation from a crowded trade, there's going to be some headwinds there.
So Coca-Cola reported that volumes were flat in the United States. They really had their earnings that were in line on pricing power. Do you have worries that the pricing power is going to diminish or that commodity prices will spike back up?
Well, first, I don't think the pricing power is going to diminish. What I'm really worried about, when we came into the year very bullish on the consumer, we were really expecting this retail sales number that we saw in January. And I think the economy is really humming along. That's a problem, though. The Fed needs to stop the economy from humming along. So some of these staples that are really tied to the consumer and that have a higher multiple could really become more of a pulled down by the broader market if we were to see the Fed become more aggressive and tighten. So I'm really worried about a Coca-Cola in that environment, less worried about an AT&T, get a little bit of a better dividend. Also in the story like an AT&T, just to pivot here, is the CapEx. A lot of investment in 5G right now. They're not going to have to make that type of investment that they've had in the past, looking out to the future. So I like names like that, especially ones that are unloved.
All right, just to be clear, Coke dividend at 3%. Michael Farr, what do you think about Bill's thesis here, getting out of Coke and then jumping into AT&T?
I wouldn't know how to do it. Basically, I'm a lot more like Warren Buffett, where Warren Buffett's owned Coca-Cola for the last 50 years, I think, and never is going to sell it. And yes, I know I'm always safe if I say I'm a little bit like Buffett and these sort of things. So I wouldn't know how to trade a company like Coca-Cola. I think it's a core portfolio position that I would continue to hold. I think he may be absolutely right in the near term because I do see pressure on the consumer, and I think it's coming. And I think when you do see it, companies like Coca-Cola and Pepsi and others will be least affected. He has a good point, but I'm just not a trader of Coca-Cola, and I'm still worried about the consumer as we get out to the middle part of this year.